In this chapter, we are going to look at the financial management with a bird's eye view. So first thing that I'd like to bring to your attention is that, well, there's different forms of business organization, and that creates the value for investors. And then even though it is designed that way, then there are conflicts. Now these conflicts are known as agency problem. And then there are ways to mitigate this agency problem, and that's known as agency cost. And then we also say that, well, when the corporation tries to maximize the value of the firm, it maximizes the shareholders' prices, stocks prices, and that indicates that it is adding maximum value to the society. And then there is a structure, and board of directors are appointed by the shareholders, and then board of directors in turn appoint executive officers. So then the conflict between owner and management is one, and owner is the shareholder and management is the agent. And so when shareholders appoint management, they are supposed to maximize the value of the firm. But if the agent feels that is going to risk their position in the company, they will not undertake that initiative. So they will let go the maximum value of the firm, and because they let go of the most value-added projects. So that is why the value of the firm is not maximized due to this conflict between the owners and management interest. And then on the other hand, when a bondholders gives money to the shareholders and to carry out their business, but they give it at a given risk level, but the shareholders can take more risk, and it becomes a win-win situation. It is basically all for the shareholders, because if it wins, then shareholders' prices goes up, but if it fails, it is the bondholder whose price of bond falls. So that is why we say it's a like head I win, tail you lose kind of situation. So we say that, well, a goal of financial manager is to maximize the value of the firm, subject to agency problem is taken care of. The agency problem is defined as the problem between principal and the agent, and agency cost is the cost incurred to mitigate the problem. So we have different forms of business organizations, proprietorship, partnership, corporations. These two make proprietorship is the largest number of businesses and corporation is the smallest. However, it is the reverse in terms of market size. So 80% of the businesses are proprietorship, and they only cover 20% of the business. On the other hand, corporations are the 20% of the business, but total business, but they cover 80% of the market size. So from the importance of this organization feature, we see that, well, businesses are dominated by the corporations, and therefore this financial management that we talk about is about managerial finance or business finance. Now, there are advantages to partnership and proprietorships. It is very easy to form. It has got very few regulations, no corporate income taxes. Personal income taxes are the business taxes. On the other hand, disadvantage is that it's very difficult to raise capital, unlimited liability. If it fails, then they can come after you besides your level of investments, and it has limited life associated with the proprietors. And usually these form of businesses are formed by LLCs and LLPs. So these are the good multiple choice questions for your exam. So keep that in your mind, please. And then advantages of corporations, on the other hand, it has unlimited life, easy transfer of ownership, limited liability, and ease of raising capital. And it has a disadvantage. Double taxation can take place. That means you pay income taxes because you receive dividends from income from corporations, but also you also have to pay as a corporation. And setting up and report filing are the cost associated with it. And stock prices and intrinsic value. This is something that we always say that be it known that price represents value. So when you see look at a computer and it says it's a $1,000 price, and that should give you the value equal to 1,000. If you get the value 1,000 and the price is 950, that means it's an undervalued computer. And on the other hand, if you pay $1,100 when the value it imparts is 1,000, then you say that it is overvalued. So in financial markets, the price must be equal to value in equilibrium. This is the part that means in the long run, price will equal value. In the short run, it can deviate, but market finds or discovers the true price. So this is what we say that managers, when they take actions, it will result in the price equals the value. That means market is efficient. And then we have this chart which basically says that, well, they manage the risk, and after they manage the risk, the stock's price and the value becomes equal. And I have explained this stockholders manager and conflicts before, and this part that you see with the conflicts are agency problem, and to mitigate this conflict, these are the agency costs. You provide incentives for the manager to perform, so that's the cost of the corporation, and intervention by the shareholders directly, and then you provide a threat of firing, and then above all, there is a market discipline, the threat of takeover. If your management is not performing, then they will be taken over by another company who can take over and perform better than existing corporations. And then there is green mailing and all those sort of thing. Some individuals, they buy lots of shares, and then they tell the company to buy it back from them. This is called leverage buyouts. So they buy those stocks at a premium price, and if they refuse, they basically take over the company and split it and sell it. And these are known as leverage buyouts. And you have seen the movie Wall Street, and Michael Douglas is one of those green mailers. And that keeps the companies on their toes, that they say that, well, if we don't perform, then obviously someone else will take the company and then fire all of them. So primary goal of management is to shareholder wealth maximization, and basically subject to the agency problem is taken care of. He also said that this sort of system also looks at the maximum social good. I hope this is clear. We will, in this week, we will talk about chapter 1 and chapter 3. Thank you.